Hello, welcome to TouchPoint with Tayo. Once again, this is a show where everything matters. I'm your host, Tayo Oweye, and on TouchPoint, we engage Africans' realities. We deal with issues that concerns Africans in diaspora and Africans in Africa. We educate minds and definitely touch on trendy issues. Just as we say, we're talking about practical guide to banking system in the UK or in the Western world, and tax systems, investments, personal finance, entrepreneurship, and retirement planning as an immigrant. And my guest, still the same as my guest last week, and I have Mrs. Funke Ogunjobi here with us today. You remember her, and the last point she made last week was credit card is a myth. And she also said the understanding of the UK tax system is the beginning of wisdom. Good day, and how are you doing today?
I'm okay. Thank you, my host,
Thank
Dr. Tayo Weye. And it was nice, discussing those nuggets and gems previously. And yes, looking forward to what we've got today. And also happy to see you in Iolua. And happy to have you here also, Mr. Joseph Adebola. So yeah, we roll. And just to say quickly that I've not really debunked anybody having credit cards. I've just said that the myth around without you acquiring a credit card, you can build a credit. No,
Okay.
that is not correct. You can build a credit without a credit card. So it is not the only means of building a credit in the
Credits.
United Kingdom.
You see what we are in for? Even before we delve into it, we're already in the sea. We are really rowing on and on with this issue of financial system. So, but you can join the conversation on YouTube channel Touchpoint with Tayo, and you can also listen on Jambo Radio Scotland audio stream at jamboradio.co.uk. You can also email us at touchpoint with Tayo at gmail.com. Send us your comments. Get yourself embedded in this conversation. Contribute, comment, and let's see what we have for navigating the financial system as an immigrant. Tips for success. We go right in because last week we stopped at the point of um, tax system. Tax system. And many immigrants are quite unaware of tax issues and refund opportunities, such as claiming expenses for work-related travels and or training. As an immigrant moving into the host country, like the UK, what do you think are the most important tax responsibilities for immigrants to be aware of?
um, so thank you, host. And what I think really is, aside from, the expenses that you could claim back from the business, it all depends really on how you are established. So there are different ways in which you can actually be in the, let me say, income tax system of the United Kingdom. It's either you are trading your time, you know, for money. So you're working 9 to 5, meaning that you are an employee. So once you become an employee of any organization, you're automatically enrolled in the UK income tax.
Mm.
Number two, if you are working for yourself, So you are a business owner or you are a contractor. You'll have to register with them to have your self-assessment registered. And so you have the responsibility at that point in time to submit your returns on a yearly basis. So also with that, you get on the income tax system of the United Kingdom. So they give you a UTR number. That is a unique UTR. So let's just cut that place off. Yeah. So you get a UTR number. And that unique number is to identify you as a tax person with the HMRC. So that is your tax number with the HMRC. And once you are registered and you have a UTR, so all your transactions with HMRC, you'll have to quote that UTR. That is how they know you as a tax entity with them.
Okay, I just looked at it now. Taxpayers reference.
Sorry?
Unique taxpayers reference.
Oh, unique taxpayers reference. Yes, that's it. That's so UTR. So that's it. You have it. And if you are also a business owner and you take salary off the business or you take dividends also from the business, you are categorized as a self-employed person. So you also have to let the HMRC know that you are doing that for yourself. And the essence of that is because you decide your salary. So it's not as if you have a manager that is giving you your salary on a weekly, monthly basis. So it's a way of telling the HMRC, hey, HMRC, my name is Mr. John or Mrs. John, and I work for myself. My company is John Limited, and I paid myself 30,000 salary in the last year. Can you please calculate, number one, my PAYE, number two, my NI. So you give them your 30,000, you put that into the system. The system runs through that, takes out personal allowance. For example, currently in the UK is £12,570 per person. And then whatever that is left off, 30,000 minus that personal allowance, they begin to calculate your PAYE and your NI. So you have submitted yourself to the HMRC to calculate your PAYE and NI. And the difference between that and somebody who is employed is that the company bears that responsibility. So they take out tax from source from you if you are an employee. But if you are a business owner, you tell HMRC. So they take it after you've even spent the money. Yes. So that is why I tell people in my accounting practice, because I manage businesses accounts and individual accounts in Elista Accounting Services, I tell them, get like a small savings account. As you earn salaries every month, take a portion, at least 20% of that, put it in there.
20% of it.
Yes, so that at the end of the year, so you just put it in there. So that will be your PAYE or NI. So that at the end of the year, when you now submit all you've earned in the year to the HMRC and they now run their calculations, it comes to a particular 1,000. You are not running around looking for money to pay. So you just go into the account and pay immediately.
As a self-employed person.
As a self-employed person.
Okay.
Yes. So that is wise to do. You know, I said that the fear of the UK tax system
is the beginning of wisdom.
It's the beginning of wisdom.
What of someone who is working?
So, like I said, if you don't have to worry, because you will see on your pay slip, you earn 1,000 in the month. PAYE tax is this amount. NI contribution is that amount. The total is what they pay into your bank account. So they've already accounted for those taxes for you.
Yes.
So that's the difference. But when you are working for yourself, that is what you need to do.
What is the age? I mean, how does the national, we have national insurance, someone is out there maybe asking, why are they removing national insurance NI from me?
Okay, so I will first go back to the part I was talking about, then I'll come to this NI.
Okay.
So if you as an individual working for yourself, if you now run a payroll service for yourself, you now say, okay, I am Mr. John, I pay myself 1,000 every month. You get an accountant to plug that into your payroll. So the accountant will put the 1,000 into the payroll software, put all your details, your NI, and your tax code, because that will determine what allowances will be deducted before they apply the percentage of tax. So the accountant will do that, put all the necessary information into that payroll software. So it will now generate you your PAYE and your national insurance contributions for that month, and it will tell you how much you should pay yourself from your business into your bank account. You still have your account. You are the owner of the business.
Yes.
So after you put in 1,000, you say, this is your PAYE, this is your NI, and it says what you have left is £497.
Wow.
So that means you go into your business account. You are your manager.
Yes.
You go into your business account, just in all wisdom, just pay £497 into your salary account. Let it show that was how much you paid. Don't just leave it in and say, I know it off by heart. So you just be digging your hand into the money. You go to McDonald's today, you spend £50. You go to Asda, you just keep doing that. And so when I see your bank statement with your pay slip and I say, sir, you paid yourself £497 last month, I can't see that come out of the bank statement at the end of the month or even at the beginning of the month. Where is it?
Wow.
I just spend it. So if you help me total all my spendings, you should come to that. No, that's not how to run it. You're putting yourself in a lot of situations that you'll not be able to explain at the end of the day. Yes. So that's another wisdom you have to learn. So, and if you are one person that you don't even want to touch your salaries at all, because I have clients like that, some people do that. You just want to take it at the end of the year because you have a target.
Yeah.
Or maybe you have your 9 to 5, but this one business is just a side also. So you are not taking salaries at all, but you just want to take it at the end of whatever your financial year is.
Yes.
You just want to take 30,000 all in one go. So at that point in time, we just run that through the system, and it gives us the total of the PAYE and the NI that you are due to contribute on the 30,000. So you can do it two ways. Either you do it on a monthly basis or in a bulk way. So coming to talk about NI, NI is, in fact, it is NIN, National Insurance Number. So that is the amount of money that the government of the United Kingdom take out of your salaries. And they put that into a pot that is called the pension pot. So that is where they pay pension from when you retire. So it is a way of saying, okay, we know you are working now. These are your active years. Let us take a portion of your money, invest that money for you. So it's not just sitting idle. They run it through different kinds of investments to generate more money. So that when you get to a particular age and you retire, they then go back into that and begin to pay you on a monthly basis, depending on the law that is currently ruling at the time of your retirement. Well, I would just like to say at this point to anybody who is listening there, it is good. In fact, you cannot even tell the government not to take NI from your salary if you are eligible, because they have their thresholds. There are lots of conditions. If you do not meet this and that, you may not be paying it. But once you have met those conditions, it's a must. The system will just automatically calculate. Yes. So if you're working for yourself and they are taking NI from you, I've got one advice that I would just like my immigrant person to know. go and open a personal pension. So the NI, when you retire and they start paying you pension, is called the state pension. You must have heard it, even in Nigeria, they do that. The state pensions, those who had worked with the government, when they retire, they get state pension. But you will do yourself a lot of good by opening a personal pension. There are a lot of platforms that you can do that with. There are many. If you just Google it, it will come out with a lot. So what you want to do with this is you put in some money, even if it is £100 a month. Shove it in there and put it in stocks and shares. Don't just put it idle in cash, because it won't generate you a lot at the end of retirement. So that let compounding interest or compounding begins to do its magic on your £100, you know, on a monthly basis. Yes. So once you have it there, by the time you retire, that money there, the government has just less control over it or how you take it. Less. But when you consider the NI, all the conditions to you getting it when you retire, all the conditions sit with the government.
So but they have more control on that.
They have more control. But your personal one, currently, you can start taking out from your personal pension when you are age 55 years. Yes, you can start taking out. So you can take a lump sum up to 25% of what you have, you know, and you won't pay tax on that. And then whatever that is left of, you can tell your provider to either be paying you, you can buy annuity with that to say, pay me this on a monthly basis, pay me this on a monthly basis, or on a yearly basis, however it is that you want it. So that is it. So it's a good way of making sure that you provide for your tomorrow. So that irrespective of whatever it is the government does, even if they move pension retirement age to 90 years.
Yes.
Because it's possible the way they're going, you've got your safety net. Next. So you can always go there and take from whatever it is that you have put out there. So when it comes to income tax, those are the aspects that you have to make sure that you understand. And when you're talking about personal pension, it is called SIP, SIPP. That is self-invested pension plan. So if you Google it, you're looking for SIP, you will have a lot to read about it. And everything is so beautiful about it.
Thank you so much. It's so. What are the risks of non-compliance to paying all these taxes, and how can immigrants avoid HMRC penalties?
So if you're employed, you can't avoid it. If you are working with Tesco, Sainsbury's, and you are a permanent staff, you can't, because you can't go behind the system and tell the system not to calculate your tax. It will definitely do. But the problem is when you're working for yourself. So because you're working for yourself, you decide on how you spend the money that comes into the business, isn't it?
Yes.
So that is where you have to tidy up a lot of things. You have to make sure that you don't take money that you can't explain what you spent it for, just because it's your business. No.
So must be accountable.
Because the eye of the government is on everything. Yeah. So, and when you are transferring money from the business to yourself, you know how when you are using your mobile app to pay money, it will tell you for the description or the narration or whatever the money is for.
Yes, the narration.
Narrate it so well. Let it read the intention of the transfer. So if it is loan,
put it as loan.
Put it as loan. If somebody has loaned the business money and you are paying back, don't just say Frank or Mr. Frank. No, say loan repayment to Mr. Frank.
So the naming itself matters. The way you narrate
It's the
it.
narration. Because if they come in, because they can come to your business anytime. They do surprise checks. HMRC can do that. If somebody tells them anything, or they just sense that, they do. I know a lot of people that they do that for. They do that for me as well. Yes. So they've come to me before and they're just looking for what is not. So, and I always tell people, be very, very straight with whatever it is that you do. Because you must be able to, because even if you brought your accounts to me, the accountant, and I just say Mr. Frank in January, I see another Mr. Frank in June, another Mr. Frank or Mrs. Whatever, and I come asking, oh, what is this payment or what are these payments for? And you are just
Scratching your head.
I can't remember. Let me, I will go back. You don't want that to happen. You must be on top of your money. You must be in control.
Yeah.
Because if you don't tell me what that money was meant for, if I think out of, okay, what you normally do as a business person, what's the main transaction that you do? And I lump that money into a different code. You may be paying more tax because of the categorization of that item. Because you didn't know. And there's no way I will know what you spend the money for, because all we saw is Mrs. Johnson.
Yes.
And you can tell me what the money was for.
What's meant for.
Exactly.
Wow.
So that means you have given the accountant the liberty to code that money or that transaction to whatever is best to their judgment. And so it may not really do well for you. Because if we code it in wrongly, you may then have to pay more tax. Or even reduce your tax.
Okay.
So that is why you need to understand that you have a huge responsibility. It's not just to open a shop or to start business.
Anyhow.
That responsibility also is yours.
To be accountable. Thank you so much. Now we've known some things, because there are still some other matters within the issue of understanding and managing taxes. We've just touched point. I mean, we can't deal with it. That's why there are quite a number of training sessions that you do, and for any of our audience that probably wants to join our training session, you definitely see that on the YouTube, which you can go to our page and get that. But I've earned money, I've worked, I've been a business person, or I've earned salaries. What are the best investment options for immigrants who are new to financial markets? I don't know anything about UK financial markets as an immigrant. How do they operate? How do you think an immigrant can make the best use of all these financial markets tools? What are they? How can we get access to them?
So I would just like to say that you don't even have to be living in the UK to be able to access the UK stock exchange market. It's open to anybody, anywhere in the world. As long as you have your money to buy shares, to buy stocks, you can do that. But it would just mean that the investment or the investing broker or platform you are using will have to have vetted, you asked you for some documentation. They would have taken off some documentations of you so that they know where you live, your country of residence, and all of that. It's just like you opening an account with any of the apps to say, help me buy shares. They will ask you all those ones. So you can invest in the UK stock exchange as an immigrant or a non-immigrant. Anybody can. But the moment you start living in the United Kingdom and it's your country of residence, and then you want to start investing, you will then need to give them, for some of the investing platforms, they will need, number one, your visa details and also your NIN. Yes, so some of them would require that before you can register on the platforms, because if you start making money or making earning interest and making gains, there's a link between them and the HMRC, to report that you've made this amount of money. So that's one thing. And also, there are lots of things that you can actually invest in the United Kingdom, if that is just the only focus. They're just looking within the country. You can do stocks and shares. So stocks and shares, that's where you go into the stock market through any investing platforms and say, okay, I want to buy the shares of company A or Amazon, for example. And then you give them your money. You tell them on the platform, you would have seen the current price, the share price, and then you determine
how much.
This is how much you've got. I've got £1,000 to invest, and I want to buy all of this from Tesco shares, because to me they are booming. I like the dividend yield, so I just want to go for that. So stock and shares is one way of investing in the UK stock market. Another thing is you can go into properties. That is another way of investing. But being an immigrant, and if you don't have a credit history, you are just a financial ghost to the banks. So they will need, like I said before, your financial footprint. They want to know, if you borrow your money, how responsible would you be with the money? Will you be someone that when you have enough to pay, you will not pay, you'll be delaying and all of that, or you're going to cause us problems? So you need that. And once you know that you've gotten that established, you can start looking at what you want to invest in. And there are different ways in which you can do properties.
Yes.
You can do rent to buy, you can do rent to rent, you can do BRRR. There are different ways that you can do. So these are the kinds of things that we talk about. And once you've decided to go into that, you then have to register a company if that is what you want to do, because that is now a business.
Yeah.
So unlike stocks and shares, you don't have to register a business if you are buying it in your own name. Yes. So if you're not going into property business, you have to register. So, and I register people for that.
Oh, okay.
And you then choose what kind of investing property you want to choose, you want to go for. And so they do all your documents to HMRC and to the company's house, and that's you registered.
Oh, wow.
So, and the other thing that you can do in terms of investment is there are businesses that are dying every now and then that, maybe due to the health of the owner of the business, they can't just carry on anymore. And the business, is thriving, is good. So you would need somebody to look into that, like a professional, like a consultant, to help you analyze the business. So they will have to do some checks, and they involve the accountant as well, because when it comes to looking at the books, how profitable it is.
Yes.
We will have to come in and say, yes, this is something that you can go for. And another thing is, if you don't have the money, you have a business idea, and you just want to start, investment in one line or the other, you can team up with people of like mind and pull money together. Sometimes you may just be the person that has the idea, but these other people, you've already gotten that financial footprint, so they can go to the bank straight away and get loans. But you can't. So you hold yourselves accountable. You form a partnership. Make sure that everything is well documented and agreed to, and you carry out that business based on that partnership. And once the partnership has actually achieved its purpose, you can dissolve it, or you can retain it. If you guys are inspired to do more, and you see prospects, to tap into. So you can retain the partnership and carry on the business. So that's another way of doing it.
Yeah.
So another way you can actually invest is doing side hustles.
Mm.
There are lots of opportunities where you live. People
Mm.
are asking for something, for something, for something. Maybe there are things that people buy quite often, but the suppliers are far away. And the cost of getting it to them is even huge. But they don't have any other choice.
Mm.
They just keep buying. That's how you know, to look into that area. That's an area of opportunity for you.
Yeah.
So see how you can bring the supplier closer to the buyer,
Buyer.
and you being the middle person.
Mm. Mm.
And so investment opportunities all over.
All over. All over.
Yeah. So
Wow.
you can do just about anything as long as you are legally residing in the country, because a time will come when your legality would be checked.
Checked.
Yes, you may have to fill a form or do one or two things, because even as an accountant, we are allowed to do money laundry checks, before we sign you up.
Oh.
So it's a lot of things really. So you just have to make sure that you know where you're going, write down your goals, what you want to achieve, which of the investment vehicles can take you there,
Yeah.
and which one are you most comfortable with, to go on with. So
I think you just I was thinking of asking about how as a professional financial advisor in the UK, the role in which you can play in helping immigrants navigate that. But I think you have actually made mention of that, and it's at that point we'll go for a very short break. And when we're back, we'll be talking about your personal finance, budgeting, and remittances. These are huge things. Black tax is something we need to talk about. Welcome back from the break, and thank you for staying tuned. We're still with our guest, Mrs. Funke Ogunjobi, and Inolua, the co-host is here, and Joseph is still with us on TouchPoint with Tayo. And I don't know whether Inolua, you have any question, Joseph?
I have a question.
Okay, let's.
So, my question is for people my age, like between the ages of 13 to like 18, do you have like any financial advice for us?
yes, in Yolua, I do. So the first thing first, you have to understand what money is. That you need to somehow respect money, so, and you have to treat money with respect. Because if you don't, if you see, if the mentality is I earn or I have, I spend. Anything that comes to me, I just spend. You see, you're not treating money well, because that is not all that is meant to achieve. Part of whatever it is that comes into your hands, you are meant to keep for tomorrow. You are not meant to just spend like the prodigal son. You have to take a bit, keep it aside, and get some education, very basic education on how to save and invest. That putting your money, for example, if you have pockets, if your pocket money is, let's say, maybe £20 for the month, and you don't really need it, it's not safe. You really, really need that money. It's not the time to start going into the shops to buy sweets and biscuits, just for the fun of it. You can decide, okay, I want to save £5 of this money, put it in my coin box or whatever, or even open an investment account, because you have some of them that all you need to start with is £1. So you see, even the investment platforms, they're encouraging people to save irrespective of whatever it is you have. So you can open, for example, Trading 212. You can ask an adult to open that on your behalf, or you can even do Agrip's Lansdowne. the minimum you do with them is £25 a month. And they have tons of stocks and shares that you can buy, maybe like 7,000. So that one on its own is even overwhelming. I've talked about that in a long time. So you just choose one, you just put it there. And you keep seeing your money grow. You see, in the first few years, it may seem like, why are you even doing this? Because just tiny, interest will come on top of it. But where you begin to enjoy saving money or investing is in the long run, because there's something called compounding interest. The rate at which it works, especially when you start looking at 10 years and above, you will see that the interest you generate at the end of the day is 2 times more than what you've put into that interest account, into that savings account. So you can imagine somebody who is putting 200, and I'm going to call it big amount now, like £250,000 in maybe 10 years or maybe 20 years. They now come to maybe year 30 or so, they now see that even that 250 has given them 750,000 more as interest, free money. So you know how many 250 you will see in 750? Maybe like 3. So would anybody just look at you in 30 years' time and say, oh, beautiful Inioluwa, I just like, how good you've been. I just want to give you £750,000 for free? No. So that is what investing early does, to people. And it doesn't mean that if anybody is starting very late, that they still can't gain from it. They can. It just means that they, instead of doing £5 or £10, they have to put in a lot, to be able to get to a certain level. So people your age can start early. And you can start now taking money from your pocket money and put it aside, and that would help you also to start gaining some financial wisdom, because that means you go online to say, I saw something on my app. I don't know what it is about. Let me go and Google it. And you need to, wow, so that is what that is called. Can I just try it? You can just put £5 in there or £25 and see for months. Is it growing? If it's not growing, you go back and read that. Why is this particular stock, share, not growing? You go back and read, and I know you guys are so quick and fast with technology. You go back and Google it, you see, wow, so that is it. That is it. I'm going to take my money out and buy another one instead. You see, you start accumulating knowledge for yourself. At that rate, by the time you get to university, people your age will be coming to you. Even if what you are studying is engineering, it's got nothing to do with business or finance. Because you've got something to show and tell. They'll be coming to you, oh, Ini, I'm waiting for you. When will you be in your room? I need to buy some shares and I have no idea what he's talking about. I now say, oh, so you need me to tell you what to buy? And they say, yes. So that is how you become what? A coach, a teacher, and somebody who will financially liberate others, from whatever journey they are on, to bringing them to thinking wealth. So you can start, and with something little.
Okay. Thank you. Joseph.
Thank you so much once again. This is financial literacy 101. Thank you, ma. So I want to ask, ma. My own question is something that bothers me personally, and I also took it from a cue from a book I read, Rich Dad Poor Dad. It talks about the relationship between creating a separation between emotions and finance. So um talking about emotions now, for example, you have some decisions to make financially, but you if you want to apply sympathy or empathy concerning maybe situations around you, maybe relatives, friends, or family members who are experiencing some maybe challenges, maybe health challenge or financial challenge, and you are the closest person or in the right position to help. And then you are now in a dilemma between that and an investment opportunity. So
So what do we do?
exactly.
Okay.
Exactly,
Okay.
exactly.
So
Yeah. So I've heard that a lot. And it's really, really crucial when it comes to building wealth or creating wealth. And indeed, you have to run your emotions differently from investing. Because if you leave everything to emotions, nobody will be on that journey. In fact, not even thinking about a sick family member, the fact that there's always something negative about the stock market, that is going on. You won't even want to put a dime on there to say what this one that people are always talking about. And the fact that, any investing platform can collapse or any bank can just disappear anytime, you won't even want to do a thing. You will just be earning your money, be putting it in a savings account or in just that bank account where it generates nothing, and be living your life and you'll be happy. So life itself, it's a risk. A lot of times when you are building wealth, you don't attach emotions to it. You have to be strict because there would always be emergencies. There would always be something that wants to take money from you. So you have to be able to say, this is where I cut the boundary, irrespective of whatever is going on. This is what I have. Because if you are not decisive, it will take you a long time to really get to your wealth goal. That is, even if you have one initially. Because people who run emotions with investments, you will see that most of the time they don't have a solid goal. It's anything that goes, okay, my friends are doing it, let me just do it. So they don't have something they're looking forward to. So anything that happens, they quickly go. Investment does not matter at that time. That thing has to be dealt with. Because you see, even when somebody is sick in the family, okay, imagine that you don't even have money to save at all, and somebody is sick. Will you not think of a better way of getting them out of that situation? Do you understand? Is it because you now have money that you've put aside that you're thinking, okay, I could save this money? So when the person is sick, that's the first thing that you go to. That money I've got, let's use it. You see, so it's the way that you have programmed things. That is how they will now begin to work. And I'm not saying that we should be mean, especially when the family member is sick. And that is why also we train people that you must have an emergency fund. So when you keep money separately for emergencies, you know how much you spend on your bills and expenses in the month in your family. Let us just say everything you spend is maybe £1,000 our money. So that means that you need to put aside every month £1,000 just in case there's no job or something bad happens and the means of livelihood is no longer there. You don't have to keep knocking on somebody's door. You have a safe haven, you have a nest that you can actually go into and take money from. So that is one way of managing that aspect, just in case you have somebody that is unwell. And where you don't have your emergency fund, for example, another thing that you can do is you decide at that point, what or how much you're going to take out from what you've got to invest. And if it happens that you're even going to use everything, you will not always have somebody that is sick around you all the time. So it may just be a one-off thing. It may just be one-off. And so you plan for it that way. But that should trigger something in you going forward. That, oh, that was the money that I planned to invest. I've got so much hopes on that. But now that it's gone towards something that I never really planned it for, how should I plan my life, going forward based on that singular experience? Because another thing is you want to be a better version of yourself. You want to be a better version of yourself. So you just go there and say, okay, I plan to do £1,000 into my investment account, but this took it away. So what do you do then better next time? You just tell yourself, I need to make sure that I add to my emergency fund £1,000 extra, so that when I need to invest, I just invest, so that I don't have any other thing contradicting, my investment plans for me. Because at the end of the day, you see, you will still have yourself to either thank or to blame when you go back and you look at it and say, oh my God, because people will just be like, we thought you had money all along, so what happens now? So emotions is something that we have to deal with when we decide on investing. And you see that Robert Kiyosaki, the rich dad poor dad guy, he took the bull by the horn himself.
Yeah.
He said he was not always the best in school, but he decided that at one point he was going to go through it. He risked everything with his wife. He had a plan, and he told his wife, let's pay up all our debts. There was no emotions, nothing.
Yeah.
You can imagine you saving and you use all your money to pay off debts. What do you want to live on? Even if somebody was sick, how will you treat them? Yeah. So he canceled emotions from his mind. And that is where men are very, very strong. When they believe in something more than women, because emotions run through us like, that's one strength that the man has. At least I'm saying that now. That's one strength that the man has got. When they have a vision and it's so clear, oh my God, the way they will rally around everybody and make everybody see it, you'll be so amazed that even if the woman is doing, they will quickly pack everything.
They have finished it.
They will just go, because in their head, it is the result. They're already living.
That matters.
They're already living in the future result. They're already seeing it. They're already categorizing themselves as that thing. So that was what he did, and he was able to do that. Can I give a broad example to that? When you're in the investment and property investment, and you're going to buy a dilapidated house, a house that is run down, and again, I said, oh, who is going to buy this house for that price? No, I want something that is a bit made, something not as bad as this one. You see, you're allowing emotions to decide, what you want to do at that point. Because if you stay with that one that is run down, that is so dilapidated, and you put good money into it, sometimes it's not a lot, and you make it so nice, what you're going to earn from it, you'll be so surprised. So it's because you have jettisoned your emotions. You didn't let it control you at that point. You saw a mansion, in that house, and so you built it to that standard. You will see that sometimes you get ×3 your money back from that money. But if you buy one that is almost made, not so bad, because that's the kind of thing that you like to do, you won't make a lot. You won't. So life itself is a risk.
Wow.
But we have to learn to deal with emotions when it comes to saving, or investing for ourselves.
Thank you so much, ma. Thank you so much, ma. I mean, while you were talking about emotion and everything, there is this indigenous concept of "help me to spend it" that we have in the Yoruba says as a banner. So help me to spend it. So there are things that helps one to spend one's money. We know sometimes we think about it spiritually, but also they are both spiritual and also in terms of physical thing. But
and when you are spending the money, there are good causes to you.
They are good causes. They are always
you see,
good
you
causes.
won't see otherwise until much later.
Yes.